Hi there, and welcome back to the channel. Often, the difference between those people that are financially stable or have attained financial freedom is exactly knowing what to do with your money. A lot of people could have loads and loads of money. At the end of the day, you hear very disturbing things such as probably now they are broke or they lost everything. Then, which means that there is an aspect that relates to wealth creation and financial management that they did not know. Now, in this video, what we're going to do is to broaden your scope as to some of the things that you can do with your money with a particular focus on introducing you to stock trading. Listen very carefully if you have every intention of becoming a stock trader in 2025. Please stay tuned. Welcome once again. I'm Kenneth, and this is Friday Money Matters. This Friday and every other Friday on this channel. Thank you so much for all your support. Thank you to our subscribers. And if you have not yet subscribed, please do consider subscription to the channel. So what is stock trading? Stock trading is trading in the shares of publicly listed businesses. Publicly listed companies are those companies that trade their shares on a stock exchange or on a securities exchange, such as the JSE, the New York Stock Exchange, and many others that are littered across the world and in every country. So basically, that stock, a trading platform, becomes the platform where businesses raise money by trading or selling their shares to the public. So hence, most of them in South Africa that trade all their shares on the JSE are called public companies because they are dealing directly with the public, selling shares to the public as a way of raising money for their day-to-day activities. Now, stock trading obviously means that you are buying and selling the movement in the price. Now, the movement in price is often and will always be influenced by a supply and demand. Basically, what affects a price of a share, one of the most important things that you will note is that the differences between supply and demand. If more people demand a particular stock, then the price of that stock will appreciate. Now, if more people are supplying or selling a particular stock as opposed to those that are buying it, therefore the balance is that you find that the prices of that particular stock will decrease. So the valuation therefore becomes lesser and lesser. However, supply and demand are not the only things that basically influence the price of a share. There are certain things such as news, such as disasters, and all these other things that may happen. For instance, if you look at what happened in Dubai last year with the floods, or what is happening in California with the fires, these are obviously natural disasters, but they influence the performance of businesses in that particular locality. So as a result, this affects how people perceive the performance of a company, which means that speculation is one of the most important things that can influence the movement in the price of a particular share. However, to deal more about this, we're going to talk about how the share price is influenced in the upcoming videos. Today, we are just laying a foundation on the basics of stock trading if you got any intention of venturing into stock trading, either part-time or full-time. Okay, the question then is, where do you start? The most important place to start is to find out exactly or learn the basic concepts of trading. Now, most basic concepts of trading apply to different types of trading. It could be forex, you could be trading cryptos and so forth. Now, the basic things such as market analysis, how to analyze candlesticks, candlestick patterns, and different types of influences that affect a particular market. These things are primary. This has to be primary knowledge that you feed on before you can venture out into stock trading. So you need to get a footing into developing your understanding as far as stock trading is concerned and the things that affect the stock market in general. However, it is important that you zero in into a particular sector. For instance, if you want to trade or you got better knowledge of the technological sector, choose that. If you know more about beverages and what, choose that particular sector. This will help you immensely because you will then find out that the more you know about a particular sector, the easier it is to choose winning stocks and to develop a winning strategy for your stock trading. The second thing that you ought to do is to learn about risk management. A lot of people fail in trading any form of financial tools because of risk management. Failure to manage risk is always the number one reason for traders failing in this particular area. So this is very important. Learn the basics of risk management. There are so many basics, so many strategies that are used in risk management. For instance, there is the golden rule where you don't trade more than 1% or you don't risk more than 1% of your total equity. You need to find out what stop loss orders are, trailing stop losses, because these are going to be your go-to tools as far as reducing the risk when you are trading. Next, you need to now start thinking about developing a trading plan. Now, a trading plan is going to be based on a couple of things. The foremost important thing is to set your goals. You need to set clear goals why you are trading and what success looks like for you when you are trading stocks. And there are many different goals. For instance, a lot of people venture into trading for the primary reason of maybe making it a source of income. They want to earn from that. Other people, they are using it for maybe a long-term plan, an investment plan for their maybe pension and so forth. So the goals of these people will determine exactly how they trade. You can either become a day trader who maybe introduces or uses scalping as a strategy to trade on a day-to-day basis, meaning that you don't leave any positions open when the markets close. You go in and you go out. You're basically biting smaller and smaller chunks of profit here and there when the opportunities present themselves. So you are not trading long term. But on the other hand, there are other people that go in to be long-term traders. So the strategies that you're going to use for these set goals are going to be different. So you need to be clear exactly what is your goal, and your goal will determine then the strategies that you're going to use when you trade. When the strategies are in place, I think I need to mention that that strategy or whatever trading plan you have set, you need to make sure that you stick to it no matter what the circumstances are. Sticking to a particular strategy ensures that you've got a way in and a way out every time you go into a specific trade. This will help you minimize losses and maximize profits at all times. Now, having said this, that this takes you to the next thing that you must do, which is to choose a broker. Now, choosing a brokerage firm, it depends exactly on the type of goals that you have and what you want to achieve with your trading. Now, you have to make sure that the broker that you are choosing is aligned with the goals that you want to achieve with your stock trading. So take your time and make sure that your goals and the goals of that particular broker align, and this will help you immensely. Now, at this juncture, we can say that now you can start. Now, the trick is this: always start small. But before starting even trading your real money, you need to consider trading a demo account. A demo account is where you are trading in paper money, money that basically is just there, but is not really yours. You are practicing on exactly uh, maybe applying your strategy, how the market moves, learning how to use the platform on which you're trading, and maybe making sure that your trading strategy is sharpened to achieve. And you are doing a lot of testing with your demo account. Now, this is not your money, of course. So the emotion that is there is always different to when you are using a real account. Now, in a real account, once you have funded your real account, one thing that you need to note is that you need to start small. Starting small will help you build confidence as you make those wins, as you gain, and it will also ensure that you reduce your losses in that particular period of learning. Remember, you are not yet proficient as a trader. You are still learning, and the learning process is ongoing, and it will take quite a while for you to get to that position where you say now you are a bona fide stock trader. So start small and gradually increase your equity every time when you are making the right gains and making the right kind of wins. Again, once you start making those wins, this is what you need to look out for. A lot of people now think that once they have made one or two gains, then they're thinking now they have made it. For you to succeed in this, you need to have continuous learning. Continuous learning means you are learning from other traders. You are learning from what other institutions are putting out there as a learning tools. For instance, you go to YouTube, find out exactly what other successful traders are saying, find out different success stories and different strategies that others are trying, and try these. Back test each and every idea that you think is worth looking at. And this will make sure that you continuously sharpen your trading strategy and become even a more successful trader. It is very important in this that you also focus on learning what the news are out there. Now, this will help your fundamental analysis, which is one of the things that we are going to be talking about in the upcoming videos. Make sure that you know you've got your fingertip right on the pulse of the market. You know exactly what is happening in your particular sector, the sector that you have chosen to be trading in. If it is technology, like I said earlier, you need to know the movers in that particular sector. You need to know the businesses that are doing well, the ones that are not doing so well. And you can then position yourself using this right kind of information that you have to make sure that you become very proficient and successful as a stock market trader. Please be on the lookout for forthcoming videos that where we're going to be talking about certain tools and all these other strategies that you can employ as a stock market trader. Please don't forget also to give this video a thumbs up. Also share to your friends and subscribe if you have not yet subscribed. This is Friday Money Matters, this Friday and every other Friday on this channel. Thank you for watching. We'll see you in the next video. Bye.